Today, we are going to talk about the daily and the weekly bias. This is the foundation to our trading, and you are going to understand today why and how can we utilize it in the future, because you currently do not have all of the puzzle pieces, you don't have all the concepts and all the rule sets, but this lesson will be used to refer back to it when you have everything that I am going to give you throughout this mentorship. But I'm going to give you this lesson right now because I want you to understand the reason why we do the things that we do. So, today we're going to talk about the daily and the weekly bias. And we're going to emphasize on the higher time frame and why you should emphasize on the higher time frame from a smart money trading perspective. So, to define what a bias is, we're going to understand bias as the where. Where does the market have to go? Where do we want to see price go? It is about the destination. Where? In which liquidity pool? In which inefficiency? Because we discussed that the market only does one or two things. The market only goes into a liquidity pool, or it goes into an inefficiency. So, when we're talking about a bias, we are talking about the where. And a bias is defined as a pre-existent anticipation of a direction predominantly on a higher time frame. So, of course, you can also, and we're going to do that, but you can also anticipate and you can also predict the market on a lower time frame. But mostly, what we're going to focus on is the higher time frame. And why did I say pre-existent anticipation? It is a very, very important detail. And what you will observe from me is that I emphasize and I also bring to discussion a lot about being highly detailed. Every singular word has a purpose. Every single thing that we do or I do has a purpose. So, why did I say pre-existent? I said pre-existent anticipation because before, perhaps you are used to be reactionary, meaning that something in your life would happen and then you will just react to it. And I'm not even going to talk about trading in itself, but rather in life, because how you operate inside of your life is exactly how you operate inside of your trading. So, I want you from this moment now on, because I've shared with you the method in which I focus, the method in which you singularly focus on one thing. I want you to also understand that process-oriented thinking is going to change your life. Process-oriented thinking means that you anticipate something to happen and then you anticipate your reaction, which means that when the thing is going to happen, let me just talk about the market. When this fair value gap is going to be disrespected, then I'm going to do this. When this happens, then I will do this. What this does, it gives you a proactive manner to react to everything. Because when you anticipate these things to happen, you're not going to be subject to the emotion of not knowing that this will happen. You will already have a plan set from a perspective, from a position of calm. Because when you are doing this anticipation, you are very calm and you judge the situation rationally. But when the situation happens in itself, if you do not have a plan, you tend to be reactive. And I'm not talking about you specifically, I'm talking about we as people. So I want you to embrace an anticipatory personality. Even inside of your life, you're going to anticipate some of these things happening, and you're going to be prepared. If this happens, then I'm going to do this. Now, coming back into our trading education, a higher time frame bias, understanding that right now we anticipate, we never react to price, is identified using narrative, where we are at and where we came from. So I'm going to understand where the market goes by understanding what it did and where we are currently trading. So what this means is that by some elements of a higher time frame concept, meaning that I have some concepts that are mostly based on a higher time frame that help me identify direction before I go in and analyze the chart in itself, which I'm going to give you an example now. There is a thing called seasonal tendency, where the market has the tendency to go to the upside in, let's just say, June, or the market has the tendency to do this. So inside of that pre-existing bias, it is pre-existent, I have a bias to the upside, then I'm going to look at where we are at and where we came from. If we are here and we did this, then I understand that the market does not have to do this, and instead it should only do this. This is how narrative sounds. So if bias is the where does the market have to go? Where is the magnet? From which perspective are we going to see price? To the upside. If the market is going to go to the upside, then the market should perform this. And narrative is performance. It is how it should go there. So if bias is the where, the narrative is the how. This higher time frame bias, it helps clarify lower time frame intraday trading and completely removes confusion. Because what most people do is they never spend most of their time inside of a higher time frame, and that will result in emotions going into a 15-minute chart. They will think that they see something which in reality is not there because they didn't consult with the daily and the weekly, and then they will fail, and they will attribute this failure to the concepts when in reality they failed. So that is why we spend most of our time inside of the higher time frame. That's one of the reasons, and perhaps the main reason, why we spend most of our time inside of a higher time frame chart. Because once we understand rationally, proactively, what we want to see from a daily chart, from a weekly chart, the market can only go this low. I would only want to see the market going this low and then go to the upside based on a daily chart. Then we already know what to anticipate instead of a 15-minute or a 1-hour chart. So it is very easy. And if the market does this, then we will do that. So it completely removes confusion, and we anticipate, we predict that this is going to happen, so we know what to do. Easy. A higher time frame bias, not only that it gives you clarity inside of the lower time frames, but it also helps you focus on only trading high probability by avoiding intraday consolidations. And let me just take a break and take one more sip of this beautiful coffee. Also, what a higher time frame bias does, it helps you in trading with the highest degree of probability. Again, exactly the thing that I've told you in the prior point when I was talking about intraday consolidations. So you will know based on rule sets, not based on, oh, I feel like this. Based on rule sets, you will know when the market is going to consolidate, and you will take the conscious and rational decision to not do anything. And by doing this, you will not lose money. And by not losing money, you will both gain mental capital, which is linked to your psychology, which psychology is linked to your trading performance. And in the same time, you will also gain financial gains, because if you do not lose money, you actually gain it as leverage. So I will describe what leverage means. If I'm a trader and during these consolidations I lose, let me just say, not even a big amount, let me just say 2%. I still lose 2%, and this 2% is going to affect me both financially and mentally. And mostly mentally, because if you're affected mentally, then you're going to even lose more. But if a trader B, if the other trader never trades and only keeps his money, which in reality is the first rule of trading, which is to maintain your capital and to keep having that money and being in the game long enough so you can continue, he will not lose money. And he will understand that this is a period of time in which he does not have to push anything because the market is just not going to perform. And this trader is going to be massively advantaged because he will be better. If we're going to compare the two, he will be 2% up in comparison with the other trader, and also with the mental capital, which is far, far more important than the financial in itself. Let me just take another sip. And also, for the last point, a higher time frame bias helps you in understanding an easy low-hanging fruit objective, which is massive, instead of a weekly and a daily chart. So what do I mean by this? I'm going to speak in the terms of micro and macro. But what I want you to understand is that when I say macro, I say a target, a macro target is a target that is going to be hit not today, not the next week, not the next month, in like 3 months or even 6 months. So when I say macro target, I mean a target that is out of reach, but it is highly probable, but it is not going to be hit today. Now, when I say low-hanging fruit or micro target related to the weekly and daily, because a weekly and a daily, it is not a micro time frame, but I'm going to refer to it in comparison with the 3 month that it is. Instead of the macro target, instead of the 3 month objective that we have, what we're going to do is we are then going to have micro targets instead of a weekly and instead of a daily. So what is very close? We have that macro target on a 3 month chart, let's just say a 3 month basis. I want this target to be hit, and it is very far away. But until we get to that, I want to target this, this, and this on a weekly chart. And these targets, seen from a weekly and a daily, they will feel so easy to hit, which is exactly what you want inside of your trading. But here's the thing. If you're going to look at these targets from a 15-minute chart perspective, they're going to be huge. And the trades that you will do from this, they will also be huge. So in this way, you will make the weekly and the daily seem like a lower time frame. And this is huge because this is how you have bias. I have a macro target, a very distant target, and I understand based on rule sets, based on rational decisions, based on rational conclusions, I know that that is high probability. And if that is high probability as a target, then I know that these micro targets that I selected for my weekly and daily, they're also very easy to achieve. And this is the higher time frame bias. A crucial understanding that I want you to have after I take this sip of coffee, because I love coffee, is that everything starts with a higher time frame weekly and daily bias. Otherwise, there is no solid foundation for intraday high probability trading. Exactly what I talked about in the past 5 to 10 minutes. Most of your time should be spent here, and I now understand that you understand why. I believe that I've made my point clear, and if I didn't, you can DM me and tell me exactly why you did not understand so we can go and fix the problem. What you will do inside of the weekly and the daily chart is you will identify the market structure to create narrative, to create the story. You'll identify based on that macro target. You will understand, okay, the market did this, so we do not have to go here. If the market does not have to go here, then this point is going to be a reversal. Or at this point, we have to go only to this. And then I will want to target this. I also want you to understand is that bias creation. What I want you to understand is that bias creation is a continuous pursuit. And I'm going to give you an analogy. I have a macro target. Again, I'm going to continuously come back to this macro target. I have a macro target, and then what I'm going to use to understand if the market is still going to go to that target, I'm going to use these puzzle pieces, which means that I have some rule sets for order blocks, for fair value gaps, for liquidity pools, for all of these things, for market structure in itself, that will tell me that the market is still likely to go there or not. And all of these, there are a lot of puzzle pieces that are put together, and they're going to correlate into a beautiful, beautiful narrative that will tell me that the market is still likely to go there or not. But I want you to understand that by knowing order block rule sets, by knowing fair value gap rule sets, by knowing liquidity pool rule sets, by knowing market structure rule sets, you will combine them into along with the bias, and you will create a narrative. You will know that the market does not have to go there. You will also know that the market has to go there. Boom. That's why I gave you this rule set. That's why we do the things the way we do them. Continuing with this lesson, I just described why we do the things that we do, and now I want you to understand that inside of a high probability trading perspective, meaning that we only trade the days in which we anticipate and we understand that the market has a one-sided direction, so I will only trade during the easy to see market structure where the market is so likely to go into my direction. So therefore, I will see the market only one-sided with having the 9 scenarios. So if the market does this, then I will not do anything. But if the market does not do this, then I will want to see this, and I will do this. And what this means, what one-sidedness means, is that you will only see the market to the upside. So let me just give you an example. Instead of a daily chart, and I'm also going to give you a visual aid for this, but instead of a daily chart, if I anticipate the market to go to the upside, fully to the upside, for my bias, which is where does the market have to go? If I anticipate the market to go to the upside, then I will only see the market to the upside inside of a 15-minute chart. So my bias is either higher, lower, or consolidation, but mostly higher or lower. Where do we want to go? Purely higher or lower? Well, higher. Okay, we want to go higher. Then, inside of a 15-minute chart, I'm going to see every singular SIBI, every singular bearish fair value gap to fail. And I'm going to see every singular bullish order block to send price higher. So based on the daily bias, which is higher, I will then, into a 15-minute chart, only see things one-sided. For instance, if I'm trading the AM session and I see the market coming back into a 15-minute fair value gap on a bullish fair value gap, then I will never see the market, oh, it will go below this. I will see the market as, okay, the market came back to the fair value gap, then it's going to continue higher. I will see that retracement as a retracement, not, oh, the market is going to go below this. So this is why we do the things the way we do them. And also I talked about this, the process-oriented thinking over the reactionary-oriented thinking, and you now understand why it is very important. So again, I'm going to give you how we do it. It is based on being prepared. It is based on anticipating this to happen, then I will do this. Rationally, the best decision that you can do. And I also want you to understand that top-down analysis is crucial. So from a weekly, I'm going to only tell you the weekly, the daily, the 1 hour, 4 hour, and that would be it. The process would be as follows. On Sunday, what you will do is you will anticipate the bias and the narrative for the next week. So before the market even starts, you will anticipate, exactly like we talked about, process-oriented thinking in the last point. You will anticipate, based on the signatures that you saw, what the weekly direction is, the weekly bias. And where do you want to see price go before the market goes into your target. So for instance, let me just give you one example. So this is Sunday, I'm looking at the chart, and I anticipate the next candlestick. Where will it go? To the upside or to the downside? Higher or lower? Okay, if the market is indeed going to go to the upside, I understand that there has to be some kind of manipulation so we can create the low of the week. So where is the highest probable direction? Not direction, but where is the highest probability point in which the market can create the low of the week? This is not important, but I want you to understand the direction. Okay, the market can do this, can go to this level, but if the market goes below this fair value gap, let me just say, below the 50%, then I won't do nothing. But if the market does not go below that 50% of the fair value gap on a weekly chart, then I will have my bullish bias and I will see everything to the upside. This is a Sunday. And then, based on this weekly analysis that you've did, you will then refer back to it on a day-by-day basis. So let me just say you're trading on Wednesday. I'm going to look at my bias and my narrative from Sunday. I'm going to look at my weekly analysis and I'm going to correlate it with the current state that we're in. What did we do on Monday, Tuesday, and before Wednesday? Before the opening at 9:30 on Wednesday. What did we do? Well, we did this and this and this. Is the market still going to go into my weekly analysis direction? Well, yes. Then I will continue to have that bias. So, what this means is that you will do your weekly analysis on Sunday, and then on a daily chart, not on a daily chart, but on a day-by-day basis, you will constantly refer back to it and measure. Do we still go there? Do we still go there? And then, if we still go there, then you will go down into a daily chart and you will have the same process before the session opens. You will analyze the market before it opens. You will anticipate, well, if the weekly is like this, then I will anticipate the daily to be like this. So, what I want you to understand from this is that Sunday or Saturday or whenever you want after Friday's closing, you will analyze the next week, anticipating what the market will do, higher or lower. And then before every session starts, you will have a daily analysis in which you utilize the daily, the 1 hour chart, and the 15-minute chart. And then on a 1 minute chart, you will have your executions. This is how I do it. But everything is based on a weekly perspective. And I just wanted to give you some kind of structure to your week. And also, because we're here and we're talking about this, what I also want you to understand is that Saturdays, what I want you to do from now on is you will do a weekly review. What do you think that you learned from the past week? And you're going to reflect upon your week. What did you do correctly? What did you do incorrectly? and you're going to fix this. But I'm going to give you this inside of a more detailed journaling discussion. But what I want you to understand from this is that Sundays, weekly analysis, Saturdays, weekly review, and then instead of a daily, day-by-day basis, inside of your trading, you will do the daily analysis based on a weekly analysis. And I'm going to give you a top-down example from the month of June that we are currently trading in, and how I anticipated and how I created my bias and my narrative with everything that I've explained. So, as you're looking at this chart, this is the candlestick that we're looking at. This is a monthly chart. This can be considered as a macro target, exactly like I was saying. So I have a macro target here because of a seasonal tendency. So let me just give you a brief description of this. So a seasonal tendency is what the market usually does during a time period, during a time of year. So for instance, we anticipate that the market will go to the downside in May. The market will create a high in May. If the market creates a high in May, then I will want to see confirmation inside of a daily and weekly chart that this will happen. But for this current instance, for this current example, what we wanted to see and what I wanted to see really was the market to continue higher. Because when we're trading inside of an election year, the seasonal tendencies tend to not happen the way they have to. And the seasonal tendency that I saw that will fail based on other confluences, but I'm not gonna get into high detail currently, based on expecting this seasonal tendency to fail, which would be the June, July, and August, I was anticipating the market to go here. Because if a seasonal tendency fails, then we will see the opposite. And we will not only see the opposite, but we will see the opposite with speed. So, the seasonal tendency for June, July, and August is for the market to consolidate. But because we have an election year, instead of USA, the greatest country in this world, with quotations, because we have this election year, I'm going to anticipate the market to disrespect that seasonal tendency, which would be consolidation. So what do I expect the market to do? To go higher with speed. So if this is my target, this is my macro target, what I'm going to do for a monthly chart, and I don't advise you to go into the monthly, but I'm just going to give you how I created this narrative and bias. Because I have this macro target, then my micro, quote unquote, micro target would be as follows. If I have this, then the closest target would be the 50% of this wick here, this blue line, which is something significant, this one as well, but also this high, and this would be it. And I know that this is high probability, but this is even higher probability than this. So I'm going to target for this, knowing that this is high probability. Now, then I have this bias, and I have this micro and macro targets. What next? Well, I'm going to analyze. We are currently trading inside of this candlestick. I'm going to look into the left, and based on my bullish bias, based on my bullish direction with a high degree of probability, that I'm going to look here only seeing bullishness. So by taking this low on a lower time frame, I will never see this as a means of market structure shift. I will see this as, okay, the market took a level of sell side so we can go higher. I have a bias. I have a narrative only to the upside. I'm very biased. So when the market went back to this fair value gap, I knew that the market does not have to go past this candlestick's low. I only wanted to see the market go back into this and then stop. And I also have some videos and some quote-unquote proof that I talked with a student and with multiple students that this would happen in April, that the market will only go back to this, and then we will continue to the upside. But I'm not here to to brag, or I'm not here to. I'm not saying this to brag. I meant to say, but I'm saying this to understand, to make you understand that this is actually the good shit. This is actually working. So, what I saw, we're currently trading here, and to the left. What I anticipated for the market to do, and what I see here, is a swing low. And if the market goes back into favor, this is a rule set. See how it correlates. If I anticipate the market to go into this macro target, into this micro target as well, then I anticipated this fair value gap to be made efficient. When the market goes back into it, it is made efficient. And when the market leaves it, the market rebalanced this imbalance. So until we go to this target, we do not want to see this low being taken, because the market has done its job to go to the downside and rebalance this imbalance. So this now becomes a balanced price range, and the market has no purpose to go below for this if we continue to go to the upside towards this level. This is a rule set. Balanced price range. Because, as I told you, the market does one or two things. It either goes to inefficiencies to make them efficient and then balanced, or it goes to liquidity pools to fill its purpose. So this was the purpose of this movement, and it now has been fulfilled. So the market continued to the upside. We left this, so we know that the market does not have to come here. And because the market never went to the 50% of this tail, we only went to the 75%. Based on my macro target, this would be a sign of strength. So this is strength, because we only went to 75%. So, for the next week, for the next month, I never want to see the market. I allow, language is very important as well. I allow for the market to go back to the order block, and I meant to say opening price. I allow for the market to go to the opening price, to the high, but I would prefer that the market will only touch the high and then continue to the upside. And this is what I said inside of the private group, and you can go back and look at it and look at the date as well. But what I wanted to see then, because I see this as a balanced price range, so price does not have to come here. In the same time, we took this high, so I would never want to see the market go back below this, because this high was used to manipulate price to the downside. But all of these are rule sets, again, puzzle pieces that I have. So for this month, I never want to see the price into the 50% of this order block. I never want to see it even into the 75%. And I only want to see these two levels. So how low can we go into this month? Only to the order block high or opening price. If the market goes below that and it closes on a weekly basis, because we're in a monthly, if the market goes below, and I know that this is complicated, but you're eventually going to get this. I'm just giving you the logic. So, how low do I want to see it go? This and this. Where do I want to see it go? This and this. This is the target that I have for this month, but this can also be taken in the next 2 months. So I only anticipate this, but I know that this is also highly probable. This, my friend, is bias and narrative. But this was for the monthly chart. So, if I'm going to then go down into a weekly chart, I understand where the market has to go when we're talking about a higher direction, when we're talking about higher bias. Then I only want to see the price manipulate to the downside to these levels. And if we see the market go past them, then I would not want to do anything, and I would stay on the sidelines knowing that I'm wrong. And I know where the market has to go. And I know that the market has to go there with speed, because we had fulfilled this purpose. We took this high, we rebalanced this, and then there's no reason for the market to go to the downside more than this. And then we also have signs of strength. So the market is very strong, so I anticipate the market to go higher with speed. So what I anticipate is for the market to go higher with speed and very fast in terms of time. I anticipate it to do it now, because we can also anticipate the market to go higher, but we can anticipate this to happen first, a retracement. In this case, I wasn't. So what do I anticipate from this month, from this next month that never opened? I mean, it opened, but it never traded to these levels. I anticipate the market to open and then straight up rally from the opening. So what does this mean? This means that I want to see the market open and then rally inside of the first week. So what is my bias for the first week? Higher with speed. Good. So I have my bias and I have my narrative for the next week, even without opening up a weekly chart. And I know that the market does not have to go below these levels, and I know that the market has to go into this level before I even open the weekly chart. So I have some standards, quote unquote, that I want to see met. And I, therefore, concluding this monthly analysis, I want to see the market inside of the first week of June to be higher with speed. Then, okay, Alin, okay, STO. Then, when do we trade? Because I know that the market has to go there, but when do I know that the market is going to do these things? What you're going to do next, after you have your weekly direction and weekly narrative, you're going to go into the high impact news drivers. The reason being is that the market will use these high impact news drivers to manipulate the retail traders. Because the market will create a big movement into a direction to trip them in, to induce some sentiment, to make them think that the market will go there. And then we will take their liquidity, accumulating our positions as smart money. Then we will distribute. So this goes on into the accumulation, manipulation, and distribution that I'm going to talk about in the next sessions. But mostly, this is how you know when to trade. So I have my direction. I know that the market has to go higher with speed. So when does the market do this? Well, based on rule sets, based on understanding my rules, inside of an NFP week, we have NFP, FOMC, and CPI as major events. Because this is a major event week and I have NFP on Friday, I will only trade Monday and Tuesday and then skip Wednesday and Thursday, because this is the days in which the market is going to consolidate, so we can create liquidity for the main event. And then I'm going to also trade Friday after the NFP. But I'm not going to go into high detail. I just want you to understand the idea. So I already have my direction. I already have how the market will go there. And I already know which days in which I'm going to look. I'm going to look on Monday, Tuesday, and then Friday. That's it. Only look into the upside with speed for this current week. Inside of a weekly NASDAQ chart, and let me just take one more sip of this coffee. Inside of a weekly chart of the NASDAQ, based on my weekly premise, I already understand that the market has to do what? To go higher with speed. I already understand that the market will, not the market, but I would want to see the market go higher on Monday, Tuesday, and Friday. And then I'm going to only see the weekly chart as bullish. So I will anticipate, based on my rule sets, based on seeing this sign of strength, that the market never even went into the 50% of this breaker, which is a rule set. We failed to reach that. And then we also went into the fair value gap low, and then we closed above the fair value gap. So this means that the market is still strong, and this is a confirmation, again, on a pre-decided bias. I anticipate the market to go here. This is a sign, this is a signature that the market is still going to go there. So I will see this as a swing low. 1, 2, 3. A swing low is a candlestick that has a higher low to the left, a higher low to the right. I will anticipate this candlestick here to be the third candlestick of a swing low, which would form this swing low. Based on my monthly premise that I wanted to see the market go higher with speed in the first week. So this is the first week candlestick. I anticipate the market to only go to the upside. But I will never see this candlestick go into this order block, bearish order block, and oh, the market is going to go lower from here. If the market goes lower into this tail, then I will only want to see the 50% or 75% of this for the market to create the swing low here. So if this is the swing low candlestick, then I would never want to see this low being taken. So where can we go? We're here and here. Good. Where am I targeting? This. Good. So I know where the market has to go. I know that the market has to go higher with speed. I know which days I'm going to trade. And I know where do we have to go to manipulate price and then to target. So I do not expect you to understand all of these things that I've said, but I want you to understand the idea, the flavor. And then once you have all of these puzzle pieces, you will understand everything that I talked about in this video. And that's why I always tell you, students, to refer back to these videos after you are done with the puzzle pieces. Therefore, what is weekly bias? Based on our monthly premise, our anticipated direction is bullish for the next month. Based on the bias correlated with the narrative elements, which are the puzzle pieces that I've told you about, market structures plus sign of strength, sign of weakness, and all that stuff, we want to also see the weekly chart go higher. Or there will be instances when you have a monthly bullish bias, but you will have a bearish weekly bias because you anticipate the market to retrace before we go to the upside. But I'm not going to go deep into that. I just want you to understand that monthly and then weekly, we want to see the weekly go higher. Based on the weekly premise higher, along with the narrative elements on a weekly chart, with the high impact news driver calendar or the economic calendar, we will trade on Monday, Tuesday, and Friday. We already know which days we're going to trade. We already anticipate that on Monday, Tuesday, and Friday, for this current example, the market is going to go to the upside because it's an NFP week, because it's a rule that I pre-decided without any emotions. Therefore, my one-sided bias is higher. Therefore, every singular signature I'm going to see is higher. And this is an example that I have with a daily chart from the exact example that I talked about, where we have the market going back below this low and this low. And because I have a bullish bias, I would never anticipate the market to have this as, okay, this is a market structure shift. I will only see this as, okay, the market took a level of sell side. And what you can see here is that I pre-anticipated, and this is a live screenshot, as you can see here, I anticipated the market to create this inversion fair value gap, meaning that I anticipated the market to close above it and then go into these highs, as you can see. And this is what we did at the end of the week. So, how do I get better, STO? What you are going to do is now, based on, you do not have all of the rule sets, but when you're looking at this video, perhaps you might have. But what I want you to do is I want you to understand, how do you get better? You get better by studying, or quote unquote backtesting, which means that you're going to look back at price and you are going to take a top-down analysis from what already happened, like you already saw it happening. So it is very important. What you will do is you will go, I don't know what happened. What you will do, come on, is you will go into the weekly chart after the week has closed. So the week has closed. This is Saturday, in which you review what the market did, and then you will analyze. You will look at what price did, and you will look at it from a perspective of, oh, this was so easy to see. This was not easy, but rather this was so obvious. Everything was so obvious. And you will do the exact thing that you would do when you analyze the chart. So what you will do is you will go back from a weekly chart down to a minute chart in a day in which you already anticipate the market to do the things that you want it to do. So for instance, I had the weekly bias to the upside. This is Monday, Tuesday, and Wednesday. What days am I going to look at? Well, I'm going to look at Monday and Tuesday. These are the days in which I'm wanting to trade. So I'm going to look at them and I'm going to study what happened, but from a perspective of I already saw this happening. The reason being is because your brain, your subconscious, only retains things as very good or very bad. And if you retain anything negative, then your next experience is going to be negative. What I want you to understand is that you will journal only positive things. And I do not tell you to shy away from doing it wrong or analyzing your mistakes. What I want you to understand is that you will analyze your mistakes, but you will analyze them from a positive and you will understand it from a gain perspective. What did I gain from this mistake? I was so I how can I say this? This experience was so pleasurable because I already anticipated the market to go to the upside, and this is what we saw. Even though you didn't really see it, but you will log it exactly like this, as you will quote unquote trick your brain, even though you don't, because you will be absolutely able to do this, but you will say that you were able to see it before it happened, so the next time it will happen, you will feel good about it, and you will actually be able to predict it. It is like quote unquote pseudo experience. And then what you will do again is you will use words like pleasurable and obvious in your journal for attention, and then you will analyze every observation you have and get better at correlating all the concepts in building a narrative. For example, market structure plus BC equals. We knew that the market knew, with the emphasis on knew. I'm certain that I knew. We knew that the market should have not went to X until we reach Y. And what you will do is you will create a narrative and a bias for the week that has already happened. So the week is closed, but you will look at it like it wasn't there. You already anticipated the market to do this because, and then you will give the reasons from a weekly, daily, 1 hour, 15 minute, and 1 minute. And this is the most basic structural time frames. So this was the lesson. I will tell you that this lesson is mainly something that you will come back to. But what I want you to understand currently, at the time of this recording, is the main idea behind all of this that we are doing. And what I want you to also do for the next time is to study this video in very high focus, very, very high focus, and to note down your observations during a time block period, so 45-minute to 60-minute or 90-minute period in which you only focus on this. And I don't want you to rush this video. Go and study it and extract every singular piece of information from it. And then the questions that you have, you're going to ask me inside of my DMs, and I'm going to respond either with a video or in writing. So this was the video.